Gold fever, a modern rush. Gold is on fire. Prices have surged to record highs. Investors are scrambling. It feels like 2008 all over again, but this time it's gold, not housing, at the center of the frenzy. The financial world is holding its breath. What's driving this gold rush? The answer is a cocktail of global uncertainty, fueled by China's insatiable appetite for the precious metal. The world's second largest economy is stockpiling gold at an unprecedented rate. This has sent ripples through the global market, pushing prices skyward. Remember the housing bubble? This feels eerily similar, but the stakes are arguably higher. Gold is more than just a shiny metal. It's a safe haven asset, a hedge against inflation, and a barometer of global economic health. Its price movements are a signal, a canary in the coal mine. The dragon's appetite, China's impact on gold. China's love affair with gold is nothing new. It's deeply ingrained in their culture. Gold symbolizes prosperity, wealth, and stability. But something has changed in recent years. The Chinese government has embarked on a mission to diversify its foreign exchange reserves. And gold is their weapon of choice. Why gold? Because it's a tangible asset, unlike digital currencies or government bonds. It's a hedge against a weakening dollar and a potential tool for challenging the US dollar's global dominance. China's central bank, the People's Bank of China, has been steadily increasing its gold reserves. This buying spree has put immense pressure on global supply. The sheer scale of China's demand is staggering. They're not just buying gold bars, they're buying mines, refineries, and entire supply chains. This strategic move has sent shockwaves through the gold market. Western investors are now playing catch-up, trying to anticipate China's next move. This has created a self-fulfilling prophecy, further driving up prices. Riding the wave global market. Responses to China's demand. The gold market is like a giant poker game, and China is playing its hand masterfully. Their strategic gold purchases have sent a clear message to the rest of the world. They're betting big on gold. This has triggered a chain reaction. Central banks around the world are taking notice. They're starting to diversify their reserves, adding gold to the mix. Hedge funds and institutional investors are piling in, sensing an opportunity to profit from the rising tide. Even retail investors, fueled by FOMO, fear of missing out, are jumping on the bandwagon. This surge in demand from all corners of the globe has created a classic supply-demand imbalance. And as any Econ 101 student will tell you, when demand outstrips supply, prices go up. The gold market is buzzing with activity. Trading volumes are through the roof. Analysts are busy crunching numbers, trying to predict how high gold can go. The consensus, no one knows for sure. But one thing is certain, the gold rush is on, and it's showing no signs of slowing down. Safe haven in a storm, geopolitical tensions, and the price of gold. Gold has always been seen as a safe haven asset. In times of uncertainty, investors flock to gold. It's a tangible asset, a store of value that transcends borders and currencies. And right now, the world is a very uncertain place. The war in Ukraine, rising inflation, and the threat of recession have created a perfect storm for gold. Investors are nervous. They're looking for a safe place to park their money. And gold is looking increasingly attractive. It's a hedge against inflation, a store of value that has weathered countless economic storms throughout history. When the stock market tumbles, gold tends to hold its value or even go up. The current geopolitical climate is adding fuel to the fire. The war in Ukraine has shattered the illusion of peace in Europe. Sanctions against Russia have disrupted global supply chains and sent energy prices soaring. This has created a ripple effect throughout the global economy, fueling inflation and uncertainty. In this environment of heightened risk, gold is viewed as a safe haven, a way to preserve wealth in turbulent times. Section 5. The investor's dilemma, to buy or not to buy. So, should you invest in gold? The short answer is, it depends. Gold can be a volatile investment. Its price can fluctuate wildly in the short term. If you're looking for a quick profit, gold might not be the right choice. But if you're looking for a long-term hedge against inflation and economic uncertainty, gold deserves a place in your portfolio. Before you rush out and buy gold, do your homework. Understand the risks and potential rewards. Consider your investment goals, time horizon, and risk tolerance. Gold is not a get-rich-quick scheme. It's a long-term investment that requires patience and discipline. There are many ways to invest in gold. You can buy physical gold such as bars or coins, or you can invest in gold ETFs, mutual funds, or mining stocks. Each option has its own set of risks and rewards. Consult with a financial advisor to determine the best strategy for your individual needs. Section 6. Gold and the common man, everyday impacts of soaring prices. The rising price of gold is not just an abstract financial concern. It has real-world consequences for everyday people. For one, it's making gold jewelry more expensive. A simple gold chain that once cost a few $100s could now set you back thousands. This is impacting jewelers, consumers, and the wedding industry alike. The price of gold is also affecting other industries. Electronics manufacturers use gold in their components. The rising cost of gold is putting upward pressure on prices for smartphones, computers, and other gadgets. Even the dental industry is feeling the pinch, as gold is used in fillings and crowns. The rising price of gold is a double-edged sword. On the one hand, it's a sign of economic uncertainty, which is never a good thing. On the other hand, it's a reminder of gold's enduring value as a safe haven asset. For the average consumer, the key is to be aware of the impact of rising gold prices on their everyday lives. Section 7. Hedging against uncertainty, gold's enduring appeal. Throughout history, gold has held a special allure. It's been a symbol of wealth, power, and prosperity. From ancient civilizations to modern times, gold has been prized for its beauty, durability, and scarcity. But gold is more than just a pretty metal. It's a financial asset with a unique ability to hold its value in times of crisis. Unlike paper currencies, which can be printed at will by governments, gold is finite. There's only so much of it in the world. This scarcity is one of the reasons why gold has retained its value for centuries. When currencies fail, gold endures. It's a hedge against inflation, a safe haven in a storm. In today's uncertain world, gold's appeal is stronger than ever. Investors are looking for ways to protect their wealth from inflation, geopolitical risks, and economic instability. Gold offers a sense of security, a tangible asset that can't be erased by a computer glitch or a government decree. It's a reminder that some things never lose their value, even in the face of chaos. Section 8. The future of gold. Predictions and possibilities. Predicting the future of gold is a fool's errand. The price of gold is influenced by a complex interplay of factors, many of which are impossible to predict with certainty. However, we can look at historical trends, current market conditions, and expert opinions to make some educated guesses. Some analysts believe that the current gold rush is just getting started. They point to the ongoing geopolitical tensions, the threat of recession, and the debasement of fiat currencies as bullish factors for gold. Others are more cautious, arguing that the recent price surge is unsustainable and that a correction is overdue. Only time will tell what the future holds for gold, but one thing is certain: gold will continue to play an important role in the global financial system. It will remain a store of value, a hedge against uncertainty, and a subject of fascination for investors and ordinary people alike. Whether you're a seasoned investor or simply curious about the yellow metal, the gold market is a fascinating world to follow.